You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. Time to rock out with your bi-weekly source for all things options related. Yep, it is time for the Option Block with the cool kids call, the old OB. My name, of course, Mark Longo from the Options Insider Radio Network. You're home now for nigh on 2 decades of options podcast goodness, a good chunk of that with the Option Block. And of course, if you want even more goodness, like let's say awesome pro Q&As we did earlier this week, you want to win a sweet pro trading crate like our pro member Knick did just yesterday, the optionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on this fine Thursday, where in the past we've seen a lot of blood red on the screen. We'll see if that's holding up again today as we go around the horn. First, joining us from the hallowed halls of SIBO East, none other than the Flowmaster himself, Mr. Henry Schwartz from SIBO. Mr. Flowmaster, welcome back to the show, sir.
How you doing, Mark? Glad to be here. And it's not just a Thursday, it's a synthetic Friday because tomorrow...
Right, it is a synthetic Friday. Those are nice. Yeah, I tried explaining that concept to my son the other day. I was like, happy synthetic Friday. He's like, what are you talking?
Right.
It doesn't translate as well off the trading floor.
This is true. You got to be a true options geek with a floor history to kind of know what the hell that is. But we got plenty of action in the markets, and it kind of feels like the weather in New York. Actually, I think yesterday it was 80 degrees. in the morning, and then it was about 40 this morning. So a lot of volatility in the temperature, and a lot of volatility out there in the markets.
Am I wrong? Are you not coming to us from the hallowed halls of Cboe East? Where are you beaming in from, sir?
I came home. I'm actually taking a flight to California at 5 o'clock today, so I'm in between. But I got plenty
Oh,
of time to dig into options activity with
so
you.
for
And
the hallowed halls of stately Flowmaster Manor is where you're beaming in from today. I'm looking for the suit of armor behind you. I don't see it, but I guess you did sell it, so you don't have it anymore. And then
that's right.
also joining us from the hallowed halls of St. Charles Wealth Management, none other than Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to our duly appointed Red Thursday, sir.
Always a pleasure to be here. And like I was saying before the show, the market wasn't quite down enough. And I was thinking, oh, it must not be Thursday. I don't think we're doing the show today.
We shall break it all down. By the way, if I sound a little bit different, listeners, I am coming to you from the traveling studio today, doing a little bit of the old college tour time. It's that time of year, listeners. It's that season, hitting all the campuses around the country. So enjoy a little traveling studio fun as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, what the heck is trading out there. And it is another Thursday. That means the market is supposed to be getting shellacked. And it started off that way. Uncle Mike and I were talking before the show. The market rallied like we haven't seen it rally in some time earlier this week, just on the scant hope that DC was going to take a conciliatory tone in the war. 2 days of pretty strong rallies, one really strong. And then, of course, the big hope for a lot of people, I think, was the speech last night, where they thought he was going to come out and, again, take a more conciliatory tone, signal that the war was winding down, even though kind of difficult to do that in a unilateral sense. You can't just declare the war over when there's two parties involved. But nonetheless, people were hoping for a conciliatory tone. Instead, we got something along the lines of bombing them back to the Stone Age, which immediately sent the markets into a tailspin. If you watched the overnight markets, you thought we were going to open up apocalyptic today. And we were looking pretty dire early on in the session. Let's see, where'd we get out of the gate in the S&P? We were back below 6,500, sold off to somewhere around 64 and 3/4 in the cash. Then apparently Uncle Mike and his cabal woke up because they started buying the heck out of this thing again. All the folks that have been hitting that buy button all week long came back in, drove the S&P all the way back up to almost 6,600 again, kissing it. So quite a run there. And then since then, we've been pretty much selling off again, as I think maybe some of the reality of the uncertainty is sinking in again. And the S&P is back in the red, but not quite as dire. Off about 0.2% right now. Dow off about 0.3%. NASDAQ off about 0.25%. And our good buddy, Mr. VIX Cash, at about 25 and 3/4, which puts it down almost 5 points, about 4.5 points from where it was this time last week. VVIX at a 117, down a whopping 12 points. So again, 2 days of smoke and rallies. You're going to see vol come back to earth. But that said, it did seem like vol was firming up a wee bit earlier this morning. Let's just look really quickly. Let's just get Mr. Dr. VIX really angry. Let's look at how high things got out of the gate. We were threatening a 28, about 27 and 2/3 out there. Again, those early session prints, take them with a bit of a grain of salt, but nonetheless, things were spicy in the morning. We'll see if we keep selling off, if we get some of that spice back. It is very much this yin or yang in the market right now, where the bulls have been running it for a couple of days, but it does seem like there is a lot of uncertainty. The market kind of wavering where it is right now. So interesting stuff. That means it's time to go to the hallowed halls of Flowmaster Manor once again. Suits of armor everywhere. Behind him is a bust of Shakespeare, which he flips open and hits the button so he could slide down the bat poles, or I should say the flow poles, to the Flowmaster cave. Mr. Flowmaster, sir, what's cooking in the market today for you, sir?
I would love to have a Flowmaster cave. That would be kind of cool. I think the neighbor downstairs would be a little bit annoyed if I cut a hole in the ceiling, though. As you said, it was. I mean, futures were down over 100 points pre-market. Like, it did look like it was going to be ugly. that pretty much had erased what we saw certainly yesterday, although Monday was an even stronger bounce. It's just a lot of action. It's great for option volume. Looks like we're going to do about 71 million contracts today. We did 6.36 million SPX on Tuesday. I believe that was the third busiest day ever. We went into quarter end. That also adds some kind of some dynamics. In fact, I pay attention to the SPX Iron Condor community, and they some of them at least tend to take that last day of the quarter off because it can be more volatile. And that was the day we ripped up about 130 handles, I think, from the bottom. So, VIX around 25, 27, 28. That does tell you that, we're going to be seeing plenty of moves that are, 1 to 2%, just divide it by 16 to kind of get a feel for things. So, obviously the geopolitical situation and how long this war is going to go on and how the Strait of Hormuz is going to be controlled. There's so much uncertainty. Just a lot of action. But I mean, I'll tell you, when we rip 30 or 40 handles in a second or two, that means traders have to certainly keep on their toes. It also means there's a lot of opportunity out there. So, just a little bit of in fact, I did Schwab TV yesterday, and said kind of what we've seen for the last few days is a little bit of a kind of a return to moderation, right? The kind of extremes that we saw in the volatility and the market moves for oil and gold and silver, that kind of had come back to earth a little bit. Kind of looked like maybe things were going to smooth out, and then we're basically right back at it today, although kind of away from the extremes, but not boring out there, that's for sure.
That it is not. And before we get away from the flow master and I start breaking down some flow, I do believe we have the numbers in our hot little hands from our friends over there at OCC. Yes, we do. Better late than never. So, we had a war kicking off during pretty much the entirety of this month. Actually started a few days before the month started. So you had a little bit of war premium in terms of vol. That usually translates into some options flow. Was that the case out there in March? The answer was yes. Over 1.5 billion contracts. I do believe that is the spiciest month we've ever seen. I'll have to go check to confirm, but I don't think we've seen 1.5 billion before. Almost 1.52 billion to be precise. So just absolutely bonkers numbers. Let's see. Equity options, 603,000 contracts last year, 680 last month, so a 12.6% increase there. ETF options, my goodness, 513,000 last year, 678 million this year, a 32.3% increase. Index options, can't forget about them, 112 million last year, 153 million last month, 37% increase. That leads to a total options increase of 23%. And lest we forget, yes, even the VIX futures caught a bid last month, 7.3 million. That's the busiest we've seen them in quite some time. Last year was a little bit shy of 6 million, about 5.9 million. So that's up 22%. Mr. Flowmaster, you got to be impressed by these numbers. I mean, correct me if I'm wrong. Have we ever hit 1.5 billion before?
Nope. That is a new all-time record for a month. And as we've talked about, we were kind of amused by the fact that we were hitting billion contract months.
It was a big deal not that long ago.
Wasn't that long ago, but now it's like, maybe the next, I guess when we hit a 2 billion contract month, then we'll actually have something exciting to talk about.
Jesus. But you're talking almost as much volume in 1 month as the entire industry did in a year, not that long ago.
Yeah, I mean, we see the numbers we continue to see, I mean, the fact that you can see millions of contracts trading, literally in 5 or 10 minute periods when things get really, really active, it just kind of tells you what this market is capable of. I just updated numbers. I mean, we're looking at what's actually pretty interesting is on a running rate, like, so annual growth for the first quarter is about 14%, but it's almost all ETF and index. The single stock flow is actually very muted, and that's kind of typical when you get a little bit of a pullback, because retail they trade less when the market is kind of headed lower. We saw that to a pretty big extreme in 2022. This year it's kind of flat, up about 1.5%. But it's really, really impressive. And the truth is, we haven't sold off that much. I think we were at the lows, we were down about 10% from the highs, which is a very, you'll feel that when you look at your portfolio or your 401k. So that is a painful pullback. Although I think a lot of people that, have as many years in the business as we do kind of laugh at that and say, fine, a 10% pullback, yes, except, look how far, we're up 300% in about 6 years. So, market's been on fire, and, there's certainly a lot more, kind of uncertainty and really just kind of shuffling of the cards right now. But amazing volume, and for volatility products to pick up, when VIX goes up from 15, 18 up to 25 to 35, which is what we've seen last month, we get a lot of action. We get both the futures and the options, even the options on futures, which are still a very young product, but even a little bit of a spike in volume there. So it's exciting. It's given me plenty to kind of put together for OIC, that's for sure.
Yeah, you're going to be a busy guy on the state of the industry, sir. I see our chat right now asking if these are real numbers or if we are giving them a bill of goods. Yesterday, we had a fun little April Fool's Day, and we gave them some fake OCC numbers, which a lot of people believe they were good. We put some effort into it. We made it sound real, but we made it sound like March was an absolute disaster, just a complete dumpster fire, and that the options market had come to a screeching halt. So yes, these are real numbers for everyone who's asking. Yes, these are real. These are the real OCC. You knew March was going to be a banger. That's why we did that yesterday. We were just messing with you folks. Mr. Uncle Mike, a lot to unpack here. Let's start with your thoughts as your cabal and company were single-handedly lifting these markets hundreds of handles at a clip. Your thoughts overnight as the sell-off was playing off, and then if you have any thoughts about these wild options volume numbers as well, have at it, sir.
Well, in terms of last night, I was watching the speech, and as it was happening, I think we were down like maybe 10 points in the SPOOs and the futures, and I think that as it went on, the speeches towards the end, I think we were down 40 points, and then I just looked like 5 minutes after the speech, and I think we were down close to 100 points at some stage. And definitely the market did not like what it heard last night for the time being, but apparently it got over it because today we're back to flat. We were down, and the buyers definitely did come in. And so it seems to me that Trump's going to be fine with higher oil prices, even if the Strait of Hormuz is not open and the oil goes higher. Looks like from what he's thinking, we have enough oil in America. We have Venezuelan oil. We have other oils. So we're just going to do what we do. We're not going to be the ones to try and fight to open up the Strait of Hormuz, but we were the ones that eliminated their nuclear arsenal or whatever they were setting out to do. And we're just going to do some more bombing, possibly a lot more bombing. You never know. But looks like from the standpoint of the Strait of Hormuz, it doesn't look like America's going to do anything about that based on what we're hearing. But as we all know, that can all change at the drop of a hat. Oil is up again today. So we do have crude oil futures that are trading higher with the markets flat. Silver is actually down fairly, I hate to say significantly since it's down like 40% since its highs a couple months ago, but it is down 3% on the day. Gold's down over 2% on the day. So getting a little bit of a sell-off there. I know this sounds crazy, but I really do think in a couple weeks we might not be talking about the Iran conflict anymore. It'll just be another conflict like Gaza, like the Ukraine war. I think it's going to not be that big of a deal, and I think we're going to be focusing more on interest rates in a couple weeks. We'll see if I turn out to be correct on that. But we do have some buyers that have come in the bond market today. Not a ton, but just a little bit. Bonds are up a little bit on the day-to-day, both in the corporate world as well as the 10-year and the 30-year. So we do have some positive momentum there. And I think that interest rate hikes or lack thereof are going to be the thing that we're going to be talking about a little bit more in a couple of weeks. In terms of the various sectors that we have on the day to day, the one that's down the most, we have consumer discretionaries down 1.3%, healthcare down 0.8%, energy, interestingly enough, is up 0.2% on the day. So we do have that. And then we do have the Russell 2000 up just under 0.3% on the day. Nothing really is sticking out too much in the individual name world for the names with which I follow, but that could change as the day goes on. There's a whole lot of trading to be done today.
There is indeed. There's a whole bunch of number crunching to be done as well. So let's commence, listeners. I think most, let's say a month and a half ago, if we had a massive 1+% overnight swing to the red, we would expect to come into the market pretty hot out of the gate in VIX. VIX probably threatening 1 million contracts already by this point of the show. We're not seeing that today. We've seen one or two or now half a dozen gut punches to this market, including regular weekly sell-offs every Thursday on this show. So the market's kind of starting to get a little bit used to this turmoil out here. So coming into today, we're not even seeing 400,000 contracts on the tape, 391 to be precise. That's against an ADV of 1.2 million. So we got a ways to go to even hit that ADV. Doesn't seem like we're going to hit that today, which is kind of surprising, especially if you just looked at the overnight market last night and said, "Oh man, we're going to be in for it on Thursday." But at least right now, from a volume perspective, not so much in VIX. If you're wondering, what is the hot option in VIX land right now? It's our old pal, the April 30s, going up about 30,000 times for prices around $1.40. And it could be someone getting the heck out of Dodge. In fact, it looks like it probably is. There is a lot of OI on that strike. But that said, we thought we'd put it to you folks. You down for a little bit of April 30s? Are you buying or are you selling? And right now, just went live right before showtime. 100% of you want to sell those bad boys. You want nothing to do with the $1.40 for the 30 strike going out this month. I can't say I blame you, but interesting. Not even a single vote to buy them out there. So you folks are hitting ball with both hands. Are you slinging SPY with both hands? The answer is SPY looks a little bit more robust, closing in on 9 million contracts right now, about 8.85 million. Its ADV is 12.6 million right now, listeners. So a little ways to go, but not that far. It certainly doesn't need to go 3x like VIX does to hit its ADV. The S at a little over 3, about 3.05 million. The ADV 5.4, so a little ways to go, a little bit of a hill to climb for the S to get there as well. Small caps seem to be hitting this 1.1, 1.25 million contract level by this time of the show, pretty much every episode. And that is the case again today. 1.25 million contracts on the tape. By the way, if you're wondering what is up in small caps right now, you know what? I'm wondering that too. Let's go find out together, shall we? As my system plays ball with me. Here we go. IWM up about 1/3% out there right now, listeners. So getting a little bit of love back for small caps. They probably at this point with the rally earlier this week and this rally today have turned green for the year. So there you go. Small caps fans, a little bit of a feather in your cap. And the Qs, 4 2/3 million contracts. The ADV 6.2, probably going to get there unless the second half of the session really does just fall out of bed from a volume perspective. Speaking of volume, what's going on in the single name camp? Is it another day where we're all macro all the time and nobody gives an F about all things single name? Well, the answer is no. We're actually looking a little bit more than respectable out there, which lately is more than we've been seeing. These strong rallies have not been translating into a ton of single name volume. But today we're seeing 365,000 contracts. That's what it cost you to break into the top 10. So that's pretty far above our threshold of 350. So dare I say it, a respectable number. That gets you to Uncle Mike's favorite name. Yes, the monster, aka Strategy, trading 120.82 right now, off about $2. So selling off a little bit today. Looks like they got as low earlier in the session though as 116.40. So they have rebounded off their lows for the day. With their strategy goes, so goes Bitcoin. At least a lot of people think that. So a lot of eyes on the monster these days. If you want to talk about monster and all the risks potentially posed by these digital asset treasuries, check out our pro Q&A earlier this week with Mr. Bill. That was a good time over there talking all things at the intersection of options and crypto. Let's go out now to number 9. It's Amazon. Amazon all the way down at number 9. Kind of interesting, a little bit of a shakeup in our top 10 today. Amazon right now off about 90 cents, trading 209.69. It's like they sold off as low as 204.90. So they have rebounded quite a bit from their lows of the day as well, listeners. Number 9, Amazon 414 on the tape. Number 8, Meta, man, they have been shellacked over the past week. Got a lot back over the last couple of sessions and now giving some back today, off about 6 2/3, trading 572.5. They're another one that sold off much lower earlier in the session. 559.70 was their low earlier in the day. So they are also off their lows. Meta number 8, 423 on the tape for them. Number 7, Nike. This has kind of been an interesting surprise appearance in our top 10. We talked about them yesterday on the hot options report. Clearly their earnings are not exactly lighting the world on fire. They sold off aggressively yesterday and continuing that sell-off today, off about 90 cents, trading 43 3/4. They got as low as, looks like, about 43.17, so they were lower today as well. But apparently earnings no bueno for Nike. Number 7, 435 on the tape for them. Number 6, AMD, they are rallying today, so they're getting the bit in their teeth. 214.5, up 430, or about 2% exactly, putting up 494,000 contracts for the number 6 spot on our countdown today. And then number 5, we're keeping it in A, tech names. Is Uncle Mike's other favorite. It's the Fruit Company. Yesterday, they were number 10 on our top 10 countdown. You don't see that too often. But today, they are number 5, putting up 585,000 contracts. Trading right now 255.37, off about a quarter today. They got as low as 250.65, so they have rallied almost $5 from their low earlier in the session. Coming in at number 5 today, the Fruit Company. Number 4, it's Micron. This name, I mean, if it wasn't for crude and silver and all the other things we've been talking about this year, Micron would certainly be on the front page of everyone's analysis. It's been a wild year for Micron. That is continuing today, 364.60, off $3 today. They got as low as 340.20, so they were fully almost 25 handles lower at the start of the session today. So absolutely wild. Number 4, Micron, 588 on the tape for them. Number 3, out to Intel. This name has been interesting to watch over this past week. They've been catching the bit in their teeth and just riding. They are riding again today. 49 3/4, up another $1.70 or 3.5%. So they've just pretty much shot out of the gate this morning as well. So it's been a good week here for Intel, back threatening a 50 handle after it seems like you can kind of stick a fork in them for a little bit. Number 3, Intel, 626 on the tape for them. Number 2, we're going out to the land of Nevada, aka Nvidia, 176.66, up about 90 cents today. They got as low intraday as 171.37, so they have rebounded over $5, about $5.50 from their low out there as well. Number 2, Nvidia, about 2 million contracts. That means the big dog today is good old Tesla. They are putting up 2.1 million contracts. That's pretty impressive volume for this part of the show. Usually, there have been many days where we've seen on the hot options report, the top name only does a little over 2 million contracts. So 2.1 already this time of the show. That's decent paper. Tesla selling off today pretty hard. 364.82, off $16.50 or 4.3%. And they are pretty close to their low for the session right now. So unlike every other name we've talked about today, they did not sell off and then rally. They've just sold off all day. So we'll keep an eye on Tesla. We'll keep an eye on the rest of these names and see how they fare. But now it's time to keep an eye on the Flow Master, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it's time to get weird. It's time to get wild. You know, nothing gets weirder or wilder than when the Flow Master joins us on a Thursday to talk some Unchained options flow. Had some interesting ones of late, including that BF.B. That was some interesting stuff. A lot of interesting nuggets out there. Let's see what's on the Flowmasters docket today. We're going to kick it off. You know, we had a good time in that liquid-based name a couple of years ago. Let's see if we can keep the party going, but this time switching from liquor to soup. Yeah, we're going out to Campbell's, ticker symbol CPB. I can't remember the last time we talked about Campbell's Soup, but here we are today. Campbell's trading 22 bucks, up like a nickel today. So not exactly a wild day for Campbell's Soup. On the year, let's see, has it been a good year to be long some soup? Has that Andy Warhol can fared well over the past year? The answer is a resounding no. Oh my goodness, it has been a horrible year to be long some soup. My goodness, off 44%. They're off 17 handles, and unlike most of the other names that we talk about, they really have done nothing but sell off over the past year. A couple of blips to the upside, including a little bit of a rally in January from about 26 bucks up to about 29 in February. But that's really about it. This has been nothing but a blood red annihilation for the past year. My goodness. I guess they need to whisper the magical letters of AI, or perhaps say they're getting involved in drones in some capacity. But either way, soup clearly ain't cutting it. Mr. Flowmaster, this chart is depressing. what did you spot out here in Campbell's Soup, sir, while I recover from this blood red chart?
Yeah, I think part of one of the stories that I know was this year was I believe the CEO got caught on a hot mic saying something like, "Well, I would never eat our soup." But they do make I believe they make Pepperidge Farm cookies too. So and you know what? Sometimes a can of chicken noodle soup is all you need. Uh, but as you said, stock is really beaten up, and there were a couple trades that hit my scanner on this name. The first was actually, and we've had a really interesting day, right? We opened up down well over 1%. Looked like it was really, we were going to implode, and then we had this crazy, well, not that crazy given where the volatility is, but a big rebound. Now we're just kind of hanging out. By the end of the show, we might be flat for a Thursday, which would be a little bit of a departure. Right now, SPX is just down 7 points. And as you said, Russell and small caps are, those are still solidly up year to date. I believe they're up around 3% year to date. They did kind of stage a pretty good bounce. They had been up more like 5 or 6%. But so the first trade I saw was a put buyer. It was a April 10th, 19.5 put buyer. Paid a nickel for almost 6,000 contracts when the stock was at $22 or just below $22, right before 11 a.m. Eastern time. That's an opening trade. Stock's at 22, 19.5 puts. They're looking for, maybe something short term. The thing is with unusual option flow, when we see put buyers, there's two possible motivations. One is that, they could be looking for the stock to really, really dump. But the other is they simply could be a long shareholder and they've decided to put a little work into a hedge. So I'm not as convinced to take action by basically kind of put buying, even if it's aggressive put buying, and because it could be a hedge. So, but then just like 25 minutes later, we saw a bigger, more directional trade, which was a buyer of 4,100 of the June 18th 24 strike call. So these are a little longer dated, about 77 days to expiration. They pay 85 cents for 4,153 in a sweep. That's almost a $300,000 block of premium. So that's a pretty chunky trade. That's around 9% out of the money for them to kind of make any money on this at expiration. But given that the stock is really beat up, it could be the same trader. I don't know. Maybe they want a short-term hedge, but they want a little bit of a longer-term long position. But both of them open. The total volume in there is about twice what it is on average. It really doesn't trade that big. It's a 13,000 contract a day name, and I kind of like it. I don't know. I have not taken any position in the soup, but it is one kind of I might keep my eye on just because as one of the big shifts this year, right, was rotation out of the super high flyer, Mag 10, super caps, the NVIDIA, Palantir, Tesla, those are all, 20, 30% off their highs, some more. And one of the reasons small caps are doing better is because people really are back to looking at some of the real basic industrials and companies that are not nearly as sexy, that have not done very well really over the last few years compared to the large cap tech names. But if we're going into kind of a different regime here, might be worth a long. And I think I'm long a little bit of Coke through short puts. So I kind of consider that to be kind of in the same uh, same flavor, I guess.
I don't think you can get less AI and less tech than Campbell Soup. That's about as far away from AI and tech as you can get. Which, by the way, I know you like to nibble on. You can't really nibble on soup, so I guess take a spoonful of Campbell Soup is what we're talking about here. By the way, I have to read this. We're a family-friendly show, so I'll change the wording. But this is what the Campbell Soup CEO said about his own product last year. This is from last November, listeners. They put their CEO on leave because he allegedly referred to the firm's offerings as, quote, S for effing poor people. And it was recorded. They recorded that and they brought it up in a deposition for a wrongful termination lawsuit. So yeah, that's going to get you in trouble with your shareholders and everybody else when you come out and say stuff. That's wow. That's quality stuff. So, listeners, are you intrigued by this blood red chart? Are you going to scoop a spoonful, maybe like the Flowmaster? Would you be maybe more down for those near-term puts than you would be the longer-term calls? Are you staying the hell away from all things Campbell Soup? Hit us up. Let us know. I will say this: we haven't talked soup in quite a while, so that's certainly a change of pace from all the endless biotechs and AI and drones that have been dominating the tape of late. All right. Speaking of names that have been dominating our personal tape, we have been talking about Mara quite a bit. I've been talking about it on our Options Oddity show. I've been wheeling it pretty aggressively. I've actually switched to some covered strangles in this one recently, which I have gotten the put leg off, not gotten the level I wanted last month. I couldn't get it this month for the call side, so I just have the put right now in Mara. But Mara rallying today up 25 cents or about 3%. So Mara's been an interesting one to watch. They've had a wild year. They traditionally, listeners, if you haven't traded this name, this used to be a name that was one of the most range-bound names in the game. It would vacillate had an absolute floor of around $15 on the downside, and it would get up to about $30, and it would vacillate in this range. So if you could write premium to the downside, get out to the upside, it was a pretty reliable trade for a long time. Over the last year, it got back up to about 22, 23 and a half bucks. And then it started trending back down again, and it actually broke through that floor, which it hasn't done in a while, of about $15, and kept trending lower. Obviously, the crypto sell-off also caught it up. This is a Bitcoin miner, or at least it was. They did make a pivot. They sold off down to about 6.75, so well below that previous floor. And then they made a pivot where they are now rotating out of Bitcoin mining. I don't think completely, but a good chunk of it, and into the other hot buzzword, which is AI data centers and the power for them, listeners. So they're going from one buzzword to another, and the stock has mostly reflected that. It kind of rallied pretty hard after earnings. That's where I was able to get some good levels off from my covered strangle. Working to get the second leg off right now, but Mara right now $8.25 off about 414 or 33% over the past year. So it has been a challenging year. Of course, all things crypto related have a bit of a challenging year. But Mr. Flowmaster, what'd you spot out there in our beloved Marathon?
Sure. So overall volume very, very heavy. And it's weirdly kind of concentrated on the call side. We see a total volume of almost 317,000 contracts. Calls lead puts 5-1. But what's kind of interesting is I'm trying to kind of track it. What it looks like is that the two most active strikes are the 8.5 strike calls, the ones that expire today and the ones that expire next the 10th, so next Friday. And I'm guessing that somebody's rolling a position at the 8.5 line. It's a little tricky to really. I'm digging back through the open close to figure out. Looks like the position. It looks like something that might actually be rolling every week, because back on the 25th, we saw a net seller of 29,000 of the April 2nd 8.5 calls. So it looks to me like they're basically kind of rolling that short position. They got 38 cents for it back then. And that's when stock was 828. So basically, they kind of successfully rode that thing down because today, as they're buying it back for a penny, looks like they're selling the 8.5 strike on the next Friday. So, as you said, it's I mean, the crypto space right now is I don't know if you call it a crypto winter or a crypto cold spring, but there's some signs of life, but at the same time, it really has gotten it has not been a safety zone given the sell-off, and neither has gold really. This has been kind of interesting period of volatility because it was just risk off of everything. But this one's, it looks to me, I would pay attention. If Merit does run it back up through that 8.5 strike, it does look pretty clearly like somebody sort of pretty good sized chunk, maybe 50,000 of those 8.5 strike calls. And they may have to do something if the stock lifts. It's also possible they're just overriding a position they have in the underlying. But either way, I'd be a little bit fixated on that 8.5 level, just because there's some pretty big positions.
We've been vacillating around it for a little bit, and some of this flow, obviously seeing that. Speaking of which, we're just going back to that CEO, a chat mentioning that Campbell CEO is kind of like the McDonald's CEO calling his burger a product. Yeah, that was not good either. I don't think that's quite as bad as calling your food S for effing poor people. It's just an amazing comment for a CEO to make, let alone for it to be recorded somewhere. But I digress. Let's keep rolling. I was joking earlier about Campbell Soup. You can't get less, biotech AI centric than that. Well, we're going back the other way now. We're going back to biotech land, in particular, Replimune Group Inc., ticker symbol REPL, REPL. This is a newcomer. We have not discussed this one before. I don't know what type of biotech, what this name is, but the name does scream biotech off the tape. Trading $8.18, up about 60 cents today, or 7.5%. So a good day for Replimune. Let's see on the year. Has it been a good year to be long? Easy for me to say. Replimune. Say that 5 times fast, listeners. The answer is no. It's off 44 cents. So today's rally obviously is helping it. They were off about $1 coming into today. So as of now, they're off 44 cents. But they had some wild trading last year. They rallied all the way up to their high of about 13.25 on July 15th. Then immediately, this chart looks, oh my goodness, this chart. This is the most biotech thing I've ever seen. They rallied all the way up to 13.25 in July. And then literally the next day, they sold off to $2 and where is it? $2.81. Clearly, whatever they were doing did not work. They didn't get approval, whatever the case was. And then about a week later, actually by the end of the month, July, they were back up to $7.50. So this had a wild July, my goodness. And they sold off again in September, back down to 3.25. And then hung out there for a while, and then it took the rocket ship back up in October from $4.50 all the way up on pretty much October 16th. By Halloween, it was trading $10.50. Hung out there for a while, now selling off back to $8.18, where we find it today. My goodness, Mr. Flowmaster, this one has wild written all over it. What did you spot out there in our new favorite, Replimune Group Inc.?
Well, I've said before, I love biotechs and unusual option volume in biotechs because there are some very, very sharp hedge funds out there that basically employ doctors and scientists who track these trials very, very closely and know when, not just when drug trials are due to report results, but they're able to basically make sense of which trials to really pay attention to. So I love to see I pay very close attention to these drug names. What's kind of interesting is actually if you look at the open interest changes, it looks like somebody net opened 1,300 of the April 2nd, so the today, 8 calls from trading yesterday. So so for the stock to be higher, not quite up to the we're above the strike now. So it looks to me like they traded for a quarter yesterday. And I'm actually, as I look at the time of sale, I actually think maybe it was a seller. So, the stock hasn't exploded up, but it's worth paying attention to biotech names. So, it's volatility is around 300% at the 30-day level for this. So, if you'd like to trade names with super duper high premiums, it's exactly that. It's an $8 stock. So, as long as you don't kind of get carried away in your sizing, you can get a pretty chunky premium for, something that may be 30 or 40% of the money. You just have to, in general, things are priced rich for a reason. So I'd be a little careful. Really, what I would is just pay close attention to the option flow. But it's definitely worth. Let me just double check here. Yeah, it's worth keeping an eye on. I'm not too sure. If anything, I guess I would probably lean along myself. But to see 7,000 of the 13 strike calls trading today, prices are on those. $1.29. That's what I said about a 300, 400 vol name. That option is what about 80% of the money? And trading for $1.50. So interesting one. The drug names, I used to be afraid of them when I worked at the banks. Trading a drug name was terrifying, but I actually find the options data and information to be more useful in drug names than any other sector.
April 13's. Gotta love that. That has biotech written all over it. By April expiration, I love it. So stocks not quite doubling, listeners, but having a nice 50+% rally through April expiration. Are you a buyer of that? And like I said, nearly 400 vol. My goodness. That is the most biotech paper ever. But now it's time for us to wind things down. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we keep an eye on things throughout the weekend, tell you what we're watching until our next episode. Coming into the end of the show, listeners, it's like the sell-off creeping up a little bit again. We've got S&P off about 1/3%, Dow off about 0.5%, and NASDAQ off 0.4%. So go figure. I give Uncle Mike a little bit of a break, and he gives his buying finger a break, apparently. VIX cash, as we're coming into the end of the show, retreating slightly down to about 25.5. So we'll see where the second half of this session takes us. Obviously, it is a truncated holiday week, listeners. So remember, no trading tomorrow. If you were planning to wrap up anything in your portfolio or your weekly trading tomorrow, you're not going to do it tomorrow. You got to do it today. But let's check in really quickly, too, with some of our flash polls and questions of the week. We asked you at the top of the show, are you down for those April 30s for $1.40? And right now, still 100% if you want to sell the hell out of those things. It is a long weekend. People don't like to hold vol during the long weekends. These days, it might be changing though. I certainly don't mind having a little vol in my back pocket for a long weekend right now. We've seen literal wars commence over the weekends recently, so there is some quite literal weekend risk on the docket. Maybe you want a little something in your back pocket, but apparently our audience says nay to that. But interestingly enough, speaking of the conflict, we did ask you folks this week. A month ago, we asked you at the start of the Iran conflict, how long do you think this thing's going to be impacting the markets? About 1/3 of you said it would be over in a week. Obviously, that didn't happen. So we're asking you now, do you think the market impact of this will still be felt at the end of the year? Interesting stuff. Mr. Uncle Mike, what is your vote? Where do you think our audience is voting? And then what are you keeping an eye on until the Monday episode, sir?
Well, I think the impact will be felt for a long time, good or bad. But I think that in terms of the impact and that of us having ships in ships right outside the Strait of Hormuz and launching bombs, I think that'll definitely be done by the end of the year. And I think the audience agrees with me on that one. And then in terms of what I'm watching this weekend, just continuing to see if we have some type of a futures rally or tanking on Sunday night. I don't think there's much else to watch except for the the headline news, and then the other things I'm watching this weekend. Watching my church. He is risen indeed. Have a happy Easter, everybody.
Mr. Flowmaster, same question for you. You think the market impact of this conflict will still be felt at the end of the year, yay or nay? And then B, what are you keeping an eye on until your next appearance, next Meltdown Thursday, sir?
I mean, I think the macro factors and the really the price of oil and how things develop in the Middle East are going to dominate. You know, we've seen such whipsaw, and it's very clear the market wants to jump on this uh, on any resolution to things, but man, it's really we seem to be a little over eager to jump higher because these rallies really aren't lasting. So we'll see what happens the rest of the day. I guess we're going to finish the show with the Thursday rule intact. SPX off about 21 points, which is not much considering we were down over 100 this morning. But that's really the plan. You know, I mean, I think VIX were in kind of a, sometimes they say VIX is in the sweet spot, right? Like when we're like between kind of 18 and 22, I think we're a little above the sweet spot. We're kind of in the zone where people there's definitely more fear out there. But you know, as I said before, when you kind of look at the component options that go into VIX, you can kind of see something. You know, there are days where it's not fear that's driving the vol higher; it's really kind of some bullishness. Now today, actually, it's kind of back to the downside puts. Kind of like the 20 to 30 delta puts seem to be kind of contributing a little more of the VIX increase. This time around, VIX is up over a point. So that'll be it. Watching vol, watching oil, watching what happens in the Middle East.
All right, let's see what our audience is up to. Speaking of the Middle East, over 2/3 of our audience, 68.2%, say they think the market impact of this conflict will still be felt at the end of the year. Only 31.8% say no. So interesting stuff. A lot of people have pointed out all the damage to the infrastructure, all those things that can't be repaired overnight, and that certainly is a valid point. So if you agree, disagree, get over there at Options and make your voice heard. And that is going to do it for this traveling studio edition of the Option Block. No live TWIFO after this one. I am actually right down the street from the Hogwarts for derivatives traders. I will be heading out after this to go meet Rich Excel in person and check out the Hogwarts for myself. So maybe we'll do some fun stuff there. That will be hitting on demand later today. And then, of course, no shows tomorrow. Obviously, the market is closed. Make sure you've got everything you need to wrap up done by the end of the session today. One of our chat members pointing out there's a jobs report still coming out tomorrow, which is kind of weird with the market closed. So keep an eye on all the data coming out tomorrow as well. And around the horn we go. Mr. Uncle Mike, sir, where should folks go if they want more Uncle Mike goodness in their lives?
I'll keep checking out my YouTube channel. Lots of exciting things that'll be coming up in the summer with that. For content and education in general, if you'd like to have a conversation with me, feel free to reach out to me. Go to stcharleswealth.com if you're looking for a financial advisor who enjoys options.
Enjoys many things, listeners, including options. Check them out over there, stcharleswealth.com. And Mr. Flowmaster, sir, where are you heading out? Where's the next leg of the Flowmaster travel? Which conference are you going to now in California? And then B, where should folks go if they want more Flowmaster goodness in their life?
I will be at the CBO Risk Management Conference. That's the week after next in Nashville. That's the one they're actually going to be streaming my State of the Industry presentation on X, which will be something new. I'll be trying to channel Vlad from Robinhood when he did his announcement on Twitter. And then after that, a week later or 2 weeks later, we have our OIC in Florida. So lots of travel this month, and then things I think will slow down as we get into the summer. And if you want to check out what we have going on, our data sets, our platforms, just head over to cbo.com/RMA. That's Risk and Market Analytics over there. And cbo.com in general is a great resource. Look at our VIX decomposition page. You can see what I was talking about in terms of identifying which part of the SPX strip of options that make up the VIX are actually contributing to larger changes to the index level.
There you go. Check them out. Cbo.com is the place to begin your journey to the dark side. Hard to believe I'm going to see the Flowmaster in person in just a couple of weeks. Crazy stuff. Should be some good content coming to you from the OIC conference from us. So stay tuned for that. They always work my voice to the bone over 3 days, but it ends up being a good time for everyone. That's going to do it for us today on the live stuff. Back again with some on-demand stuff, hitting the feed later today. Yet another reason why you should be subscribed to the full network. The markets are closed tomorrow. We will be back on Monday, though, with another trivia battle between Uncle Mike and the Rock Lobster, all the way through to next Sell-Off Thursday. Another appearance by the Flowmaster on the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.